All right, welcome to the daily market recap for Tuesday, October 21st. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Starting things off, pretty flat day on both the Nasdaq and the S&P 500. Nasdaq just trading right below all-time highs. Very low volume the last 2 days. Uh, main earnings are kind of around the corner, so maybe some just stalling action before then. S&P 500 finished exactly flat on the day, a little bit lower than the Nasdaq when it comes to where it's at with all-time highs. Back to back, very light volume. IWO, the growth stocks of the Russell 2000, had a nice gap up on Monday. And then today, lower highs, lower lows, closed down 0.5%. And as we go through like the leaders and the industry ETFs, you'll see that a lot of the more speculative names got hit pretty hard today while money rotated into the mega caps, which kept the NASDAQ and the S&P 500 basically flat, but definitely some damage under the hood for the growth space. ARKK, this was down 1.5%, also on very light volume, still over the 5 and the 10-day moving averages. So even though we do have this slight gap down, which is the second one from the highs, overall, I'm not too concerned here. If we took out the 5 and the 10-day on volume, and this is just another lower high overall, that would be a little concerning, but I'll use the 20-day moving average and kind of this gap zone as two spots to watch for any pullbacks. And then when we switched to Bitcoin, we had a nice rally early in the day, all the way up to the 50-day moving average, rejected right off that area and have fallen all the way back to the 200-day. Hopefully, this isn't just another lower high as we start to rotate down, but crypto kind of started the risk off behavior after making new highs back, what was it, October 6th, quickly down to the 200-day. Now a 50-day moving average test and back to the 200-day. We definitely don't want to follow through to the downside here. Getting into the liquid leaders, I will replace one of these after today, but oh wait, I actually already did it here. My bad. I did replace MP, which was down another 10.6% today. We had this big move up last week and then gap down, our first unfilled gap down, never a great sign. Follow through to the downside, a couple like little chop days, and then another follow through to the downside under the 20-day moving average. So I kicked that out and I added in Google, which Google today had a little undercut and reclaim of the 20-day moving average and the support gap. After hours, it had some partnership announced and it's trading right near right near all-time highs. I guess it's a little bit lower after that announcement, but one of the more liquid leaders, liquid stocks in the market, right near all-time highs. And as we get rotation from more speculation stocks to mega caps, Google is one to keep an eye on. Even with that said, every single leading stock in this list today was down. Not usually what you want to see. Palantir, this one was basically flat, just chopped sideways. Software stocks individual or as a theme kind of held up better today. This nice inside day on low volume, break to the upside, break to the downside. Either way, it's going to be good feedback for the overall market. We'll see when you have setups like this with like liquid leaders, that's kind of later stage bases. If it can break to the upside and hold that breakout, that's going to be a good sign for the overall market. VRT, this reports tomorrow before the market opens. So, not putting too much emphasis on the price action, just going sideways for the last week or so. AMD down 1% today, but holding the 5-day moving average and support gap on a lower volume pullback. This is one of the better looking charts from a liquid leader in the market. So, again, even though it's down today, it's above the 5-day and consolidating on tight volume. I think that's constructive action. Tesla down 1% today. This was an inside day on low volume. This is reporting earnings tomorrow after the close. That's one of the main ones that I'll be watching and the market will be watching for. And you down 2% today into the 5-day moving average. First unfilled gap to the downside. We definitely want to be able to close that as quickly as possible. Otherwise, we've seen this with a bunch of other themes. You get that first unfilled gap down, and then you start building the left side of the base or the pullback. Um, So ideally, we can close that right away. We covered Google. RKLB continues to just chop above the 10-day moving average. ASTS in that same theme was down about 7% after hours. A little bit of weakness there, so I wouldn't be too surprised if this comes back into the 20-day moving average and support gap right around 6150. BE, this was down 4.3%. And kind of what we're seeing in the market is each leading theme, one by one, is starting to get hit. It started with the precious metals, then it was the quantum names, then now it's kind of the AI energy, nuclear names. Our data centers next, we'll see. But this was down 4.3%. First close under the 5-day moving average. I guess yesterday, technically, we closed under it, but first clear close under the 5-day, right at the 10-day, and second unfilled gap down. And then LEU, another theme that could be waning is that nuclear theme. Second gap down off the highs. Still has the 20-day moving average in the gap zone at 350. So a pullback into there that gets supported. Not the end of the world, but we are starting to feel some risk off behavior from the market. Getting into the industry ETFs, we'll sort this by price percent change today. My bad. First one, ITA. This is the defense and aerospace ETF. Had a change in character last week, kind of losing the 5, the 10, the 20-day moving average. You see pretty wide daily bars after we've been just like floating higher over the 5-day. After a couple ugly closes, we followed it with a gap up Monday, gap up today. Really strong action. Uh, wouldn't be surprised, given the close kind of weaker in the daily range, if this does pull back into the 5, the 10-day moving average and builds out a higher low overall there. But it is good to see more themes over their 20-day moving average. ITB, the kind of the theme today was a lot of the groups that have been weak had a turnaround day. ITB off the 200-day, this has been very weak. Home Builders ETF. Today, nice oops reversal. Closed back over the 20-day moving average. Still needs to get through this resistance gap and then start to build some higher lows. PEJ, this has been extremely weak as well as it loads here. Has been weak, losing the 50-day moving average. Then we bounced up, put in a higher low, two gaps to the upside. So some strength there. XLY, consumer discretionary, has been weak, lost the 50-day. Now it's right back up. So the themes that have been weak had a really nice Monday and Tuesday. Whether that continues to the upside, we'll see. We don't need to guess every single day, but good to see some rotation within the market instead of money just leaving altogether. IGV, this has also been pretty strong. We had tested the 50-day moving average, the first one since making all-time highs back in September. That got supported, followed by a gap up yesterday, a close back over a resistance gap today on a pickup in volume, which is exactly what you want to see. Cybersecurity, same thing, kind of oops reversal off the 50-day moving average on Friday, then two follow-through days back towards all-time highs. Retail, XRT, same in that kind of average retailer theme stock. Some good relative strength today. Whether we can actually get over the 50-day or not on a closing basis is yet to be seen, but we're at least not rolling over immediately. One group that I am a little concerned about is financials, XLF. This had two major distribution days on October 10th and October 16th. We've had a nice bounce back up to the 20-day moving average, but we rejected that today. We rejected the lower part of the resistance gap, and I don't really see the market strengthening without financials, at least like getting over the 20-day moving average. So, spot to watch is if we can close back over that resistance gap, that would be a good sign for the market. Semiconductors kind of just chopping at highs. Biotech chopping at highs. Extremely strong action out of biotechs. Very low volume today. Sideways action over the 5-day moving average. Exactly what you want to see. This is probably going to resolve higher. And then KWEB, this is the Chinese internet ETF. Inside candle today, and Trump fired off another tweet that he's like, "Hey, maybe I just won't meet with China tomorrow." It seems like the market's just calling his bluff at this point. Like all the tweets, they're not breaking through Friday's low. So Chinese equities is something that I am pretty laser focused on. Talk about this all the time. We just broke out of a 3.5-year base. On Friday, we retested that breakout point. We've not violated Friday's low. So as we build in these higher lows, it's a theme that is just getting started and something that I want to be focused on. Nuclear theme, NLR, losing the 20-day moving average with its second gap down, not ideal. And then XDX and XME, metal and mining and gold mining, huge weakness, which is great for me because I own DUST. That is the double inverse of GDX. So we had massive volume sell off on the 17th, a little bounce back day on Monday, but a lower high while gold made a higher low. That was kind of the signal that gold miners was going to resolve to the downside. And I expected that move. I didn't expect this type of magnitude though, where it was down 9.4% on massive volume just in one day. Really nice day for that DUST position, and trimmed a little bit to make sure that there's no risk on the trade. And now we can just let it come down to the 50-day moving average. Before we get into the long and short setups, again, just want to point out that it is earnings season. We had Netflix, ISRG, Texas Instruments after the close today. Before the open tomorrow, two that I'm watching is GEV and VRT. And then after the close tomorrow, Tesla, IBM, QS are the main ones that I'm watching. LRCX, interesting as well. So just know when the stocks that you own or that you want to own report. Getting into the long setups, we'll sort this by average dollar volume. First one is Alibaba, and I bought this yesterday through Friday's high. Looked like it was trending really well, got out on big volume, popped through the 5, 10, 20-day moving averages. And then today we had a little bit of weakness, but this is what I mean by it just feels like we're building higher lows here because Trump threatens to cancel the meeting with China, and we don't even take out yesterday's lows. And we pull back under the moving averages, sure, but on much lighter volume than yesterday. So a couple different areas to watch. If we get a little undercut of the previous 2 days lows and then reclaim that area, 165.80-ish, that would be buyable versus whatever the low of the day is. Otherwise, through today's high, that would be buyable versus the past 2 days lows. RKLB, this is just chopping over the 5 and the 10-day. I basically outlined this in the leaders. Looking for the pullback undercut of the support gap into the 20-day moving average, 6150-ish area as an entry. ARM with semiconductors still acting pretty strong. It's a name that I want to own, but I don't want to buy it on strength because we've seen 1, 2, 3, 4, 5, 6, 7 failures at the resistance gap. If you see this and you still buy it on strength, I can't really help you. This is a stock that you definitely want to buy on weakness because we have evidence that sellers are stepping in at this area. So instead of skewing your risk reward against you, I'll be watching for a undercut and reclaim of the support gap under the 10-day moving average at 165.70 as the entry, stop under Friday's low. LAC, I tried this today after the undercut and reclaim the support gap. I bought it late, so probably shouldn't have bought it at all, but it undercut the support gap, recaptured the daily VWAP, and then kind of pulled back into that area. Looked like it was kind of going well, and then just chopped a little bit lower while the rest of the metal names were really accelerating lower. So some good relative strength within the group. The group is souring a little bit. So similar to ARM, I don't want to buy this on strength. I want to buy this on a shakeout. So a pullback into that 620 area or 680 area, that would be buyable versus the lows of this pullback. TEM, we've been talking about healthcare and healthcare adjacent names showing great relative strength. ISRG is just up, what was it, 15% after hours after they reported earnings. So it really seems like the next group to benefit from AI is healthcare and healthcare adjacent names. With that in mind, I want to kind of focus on getting money into those themes if the market's going to stay afloat. And TEM, not a name that you want to buy on strength. Obviously, if you look at this chart, you see many upper wicks. You don't see significant follow through to the upside. So I don't want to buy it on strength. I want to buy it on a shakeout. Undercut of the support gap, 870 or 87.80. Reclaim that low would be buyable. Stop under Friday's low. Let me just go to CRISPR because it's the same kind of idea. Great relative strength here. That ARKG genomics ETF is showing great relative strength, lots of power in that group. This is one where if we can pull back into the gap zone, into that 20-day moving average, right around like 69.20, I wouldn't even be that. Um, I probably wouldn't be that patient. I'd probably like start to build into the position as it came down because it's a theme that I really think has some upside if the market stays afloat. But the key area to get most of my size in will be an undercut of the gap zone low, reclaim that area, then we can manage risk against the 20-day EMA. PSTG, we saw software ETF showing some relative strength today. This has been showing great relative strength, kind of building higher lows, higher lows, higher highs. Just looking for a pullback into that 20-day moving average and gap zone at 89.40 as the entry. Stop would be under the secondary gap zone at 86.70. AOI, we've talked about this a couple times, building this really big base, but it's very volatile. The 200-day moving average is in a downtrend, so that's not a stock that I'm allowed to buy on strength. I have to buy it on an undercut. So looking for the gap zone fill and the 5 or 10-day moving average test right around that 31.90 spot as the entry. TMDX, another healthcare adjacent name. Starting to see people finally talk about this on Twitter. So good to see. Big cup, kind of three waves down in the handle. Gap up after an ugly close on October 13th. Since then, nice strength while the market's been a little shaky. Still shaky up, but shaky. Looking for an undercut of today's low of the 10-day moving average right at 116 as the entry. This does have earnings in about a week, so just keep that in mind, position sizing wise. And if you don't get traction in the first like 3 or 4 days, probably just toss it back. Don't hold into earnings without any profit cushion. Then last one, Dave. This is a software stock. Had a monster move already from like $5 up to $280. Now building this nice clean base. Today, uppercut and failed at the resistance gap. So we're aware that there are sellers there. We don't want to buy it on strength. We want to buy on a shakeout or a pullback. So coming back into the 20-day moving average, that's the spot that I'm looking for. A secondary entry is if we gap down tomorrow or get like major weakness off the open and then start to curl and build higher lows, eventually take out the daily view app. That would also be another entry point that I would look at and then play that versus today's low, just because it's such a nice base. It's in a group that's starting to merge with some strength, and it's a stock that has a lot of power potential. With that said, if I do take that secondary entry, it would be with smaller size. And then on the short side, I think a lot of the shorts have kind of made their move already without the general market rolling over. I don't think there's a ton to do on the short side. We had awesome shorts on UAMY, on the quantum names. You probably could have gotten in with some of the nuclear names. That's a theme that I didn't short. I got my short on with the gold miners. At this point, MSTR with Bitcoin kind of rejecting at that 50-day moving average, if Bitcoin can have like one more push day and this can get up to the 20-day EMA in this gap zone around 315, that's a spot that I would try on the short side. If it kind of like chops out here and then breaks to the downside, maybe short it on weakness, but I'd rather like one more rally day up to the 20-day EMA and a gap zone, and then we can manage our risk nice and tight there. BMNR, I keep going kind of back and forth, long and short on this setup. Now I'm leaning a little bit more to the short side. We had a uppercut and failure of yesterday's high of the 10, the 20-day EMAs and that resistance gap today. Closed near the low of the day. This just through the lows would be a short versus the 20-day EMA. And if you start to get traction on this, then I would manage my risk against whatever the high of the day is. And then E, this is one of the nuclear themes that was kind of late to the party, definitely a laggard in that group, and now you're starting to see it roll over in a big way. Don't want to chase it lower, want to give it a chance to rally back up to that 20-day moving average, that gap zone at $46. Have that as your entry, then you can manage your risk above the 5 and the 10-day. And then the last two are themed trades with Argentina. we're bailing them out and their stocks aren't railing, which is when you get that, that's a kind of a big warning sign for me that there's still a lot more unraveling to do. Um, we had this nice move up, and maybe that is kind of a sign that the trend is changing, but we're still just barcoding here instead of following through to the upside. So with GGAL, just through the 20-day EMA, through the lows here, that would be the short spot. You can manage your risk, uh, I guess, above today's high. That's a little bit wide for me. I would probably just do whatever the high of the day is. And then with ARGT, this has already started to roll over. You can see a bunch of upper wicks. So every time it tries to rally, sellers come in, sellers come in, sellers come in. If you look at the top 10 most liquid holdings of this company or of this country, they're all in stage four downtrends. So good stocks to short are stocks in downtrends. When you can align that with a theme that's failing, that's something that you want to hammer on the short side. So GGAL and ARGT, there is definitely like gap risk because like if we already started to bail them out, maybe we can bail them out more and that would get it going. But when good news comes out, the bailout, and price doesn't respond to that, that's not a good sign. And that's something that you can see some accelerated moves to the downside on. So that's going to be the daily market recap for Tuesday, October 21st. I hope you guys enjoyed it. If you did, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.